Hi there, Tim Pope here with another China buzzword from the ICS News Desk. In each episode, we aim to decode and explain one hot topic in Chinese business and media. Today, it's the price war, which has engulfed China's new energy vehicle industry. Over the last decade or so, there have been several very public price wars in China. The first was in the ride-hailing industry, which started small and ended in a crushing victory for Didi Chuxing. After that, shared bikes were the next theatre of combat, with a hugely fragmented industry finally consolidating via mergers and acquisitions into just a handful of big players. But NEVs could be the biggest sector yet to descend into a price war. So who started it? Well, it seems to have been Tesla. A couple of months ago, Tesla started slashing prices on existing models of cars. Recently, some models were 14% cheaper than last year and nearly half the price that you'd pay for one elsewhere in the world. Why did Tesla start cutting prices like that? Well, Elon Musk isn't saying outright, but he's reported as saying on Tesla's first quarter earnings call that the company could benefit from selling more cars at a cheaper price. The reason this could work in China is that the EV market is huge by global standards. This year, China is on track to see NEVs make up a third of all new car sales. That's 9 million out of 27 million vehicles that are expected to be sold in 2023. That's far ahead of any other comparable auto market. And that's why it's caused such a huge ripple effect. Firstly, among foreign automakers in China, Ford, VW, Honda and Toyota all cut their prices on NEV models. Then the Chinese producers, including BYD, Chery, Chang'an and Dongfeng, cut prices just to keep up. The discounts range from cash rebates of a few thousand yuan to tens of thousands knocked off the price tags of higher-end models. In a price war on their home turf, Chinese companies have an advantage, and that's batteries. China's NEV battery makers are the world's biggest, and that supply chain is poised to better support local companies. Some of them, like China's biggest domestic NEV maker, BYD, even have their own in-house production for batteries. The Chinese auto industry as a whole could benefit from this hot competition too. According to the China Association of Automobile Manufacturers, the country has around 200 NEV companies. Some of them just can't survive on slimmer margins in a price war, and they'll either close or be acquired by their rivals. Just like in the ride-hailing price war, consolidation is a pretty likely result. Consumers are also pretty obvious winners, at least some of them. The rapid decrease in prices on some NEVs has made them more accessible for many Chinese consumers who were previously priced out of the NEV market. For years, China's NEV market was confined either to very cheap or very expensive vehicles. But it's also made some consumers unhappy because it's never nice to buy a new car and then find out that if you'd waited a week, you could have saved 30,000 yuan. But guess who really isn't emerging as a winner? Tesla. It's succeeded in selling more cars. Record numbers of them have been rolling out of showrooms worldwide, but not enough to make up for the price cuts. In the first quarter of this year, the company's revenue was down by $1.3 billion compared to the final quarter of last year. And they've had to start putting the prices back up. If you've got a China buzzword that you'd like us to explain for you, please let us know in the comments below. See you next time.